Good evening and welcome to the annual shareholders meeting of the Eppley Caribbean Property Fund. The fund is a registered mutual fund incorporated under the Companies Act of Barbados. Clause 1.3.1 of Schedule 1B and Schedule 1C of the fund's articles permits the fund's value fund and development fund shareholders to vote in prescribed circumstances, and therefore this meeting is being held for information purposes only, in keeping with the fund's long-standing tradition. My name is Nicholas Scott, and I'm the chairman of the fund and a proud shareholder. I'd like to begin this afternoon by thanking each of you for attending. We know that our investors span the region and include some of the largest institutions in the Caribbean, high net worth individuals, and thousands of retail investors. Thank you all very much for participating today. We're privileged to have you all as partners, and we're committed to building on our long track record of excellent returns, but we're also committed to keeping you informed in the process, and today is an example of that. The purpose of today's session is to give you a refresher about developments at the Eppley Caribbean Property Fund, to update you on the fund's performance in 2022, and of course, to take your questions. In a few moments, we'll start the presentation, which will be led by Justin Nam, the General Manager of Eppley, and Denise Gallimore, the Head of Real Estate and Infrastructure. Following their presentation, we'll then take your questions. Please remember to email your questions to summerbells@eppleylimited.com. That's SUMMERBELLS@eppleylimited.com. So, ladies and gentlemen, commercial real estate offers investors higher yields than fixed income. By owning underlying properties, this added yield comes in most instances with less risk. Nowadays, in an inflationary environment, it's important to note that things like rent escalation and the appreciation of the value of the properties themselves boost total returns and act as a hedge against inflation. Because of these and for many other reasons, most investors already know that commercial real estate is a very attractive asset. The problem that most investors have is that it's difficult for them to own it. Retail investors, most investors, have the resources to buy their home, but not to buy a shopping mall or a warehouse or a call center. Many institutions aren't set up to manage all of the issues that come with owning and operating a portfolio of buildings. All investors, big and small, face the challenges of illiquidity that comes with owning commercial real estate. And of course, all investors face the challenges of getting access to the highest quality assets. We created the Eppley Caribbean Property Fund to solve these issues. By owning the fund, we're allowing you, our investors, to own a share of 17 buildings in 3 of the largest economies in the Caribbean, and to do so by owning a share that's listed on all 3 regional stock markets. Our portfolio includes trophy assets, assets that you drive by, that you shop at, that you work in, that goods and services you use go through every single day. These assets are very difficult to replicate. Our portfolio is also diversified and has retail, office, industrial, and call centers. And our tenants include some of the most well-known companies that touch the lives of all Caribbean peoples. The fund generates attractive returns and pays reliable dividends, and it's coming off of one of its best performances in our 20-year history. And one last thing. At the current price, our shares are trading at 70% of their net asset value. What does that mean? That means if you buy a share in our value fund today, it's the same thing as buying a building 30% below its valuation price. I'm going to say that one more time. Buying a share in the value fund today is the same as buying a building at 30% below its valuation price. And since the value fund pays dividend yields of 7 to 9% on its net asset value. By buying shares at the current market prices, you, the investor, would receive dividends in hard currency at a yield of 10 to 12.5%. All that plus capital appreciation. Because of this, we're committed to use the fund's resources and repurchase our shares. We will do that and we'll continue to do that for the benefit of all shareholders. But we'd also encourage you to take advantage of this obvious mispricing opportunity in the market. So, of course, we're proud of the platform we've built at the Eppley Caribbean Property Fund, and we look forward to sharing more information about the fund with you today. And with that, I'll turn it over to Justin, who will walk you through the fund's performance last year. Justin?
Thank you very much, Chairman. I'm going to begin with an overview of the Eppley Caribbean Property Fund Value Fund, and then we'll go through into the Development Fund. Our objective is to be the leading owner and operator of high-quality commercial real estate throughout the region. We're well on our way towards that benchmark, and we want to thank you, our shareholders, for your support. The scale that we are able to attain allows us to pursue and execute opportunities that others in the region simply cannot do. As we are the largest listed real estate fund in the Caribbean, that is testimony to what we've been able to achieve since our strategy has been adopted and implemented by the team. Not only are we listed on all three of the major regional stock exchanges, we also have an active presence on the ground through extremely attractive commercial properties spanning different types of use cases, such as industrial, retail, and office. We have an extremely attractive income yield, which has been derived from having very, very solid rental agreements in place that are derived from extremely attractive rental counterparties. Our shareholder base, again, we thank you, has been comprised of the largest and smartest institutions and individuals throughout the region, and we're continuously working to optimize and improve our operational efficiencies to expand the stream of cash flows that we are able to provide to our investors through dividends. Not only are we providing dividends, we're also increasing the frequency within which we pay our dividends to our investors, and we have adopted a quarterly dividend policy recently, and investors should get more pass-through from the underlying properties that we own. And when you buy great properties in excellent locations at attractive prices with strong tenants, you're going to benefit from capital appreciation, and we've already started to see that through the performance in the fund so far. I'd like to move on to kind of give you a sense about who is behind the leadership of this fund. We believe that strong governance is one of the pillars of a successful strategy and successful entities over the long term. We're very proud to highlight who the directors are, and led by Chairman here, Mr. Nicholas Scott. All these directors have broad experience that are directly related to what we do at the property fund, spanning insurance, retail, commercial, fund management, all throughout the region, not just in one particular jurisdiction. And we bring that expertise to bear on the output of the fund that we are able to express to you today. We have very strong conviction in real estate, and as fund managers, we have exposure to other asset classes, and we bring that expertise to the value fund to find deals, to execute, and to continue to extract additional value for you, our investors. This slide really gives a snapshot of what we've been able to achieve and what our portfolio now comprises. It's 17 buildings across about 900,000 square feet across all the major regional markets with occupancy north of 90%. We've achieved record net profit of 9.5 million Barbados dollars, and our NAV is now 110 million, or about 81 cents on a per share basis in Barbados currency. Now I'll just ask Denise to give a more granular sense of what the portfolio entails and how we've been able to achieve the returns that we're so proud about.
Thank you, Justin, and good afternoon, everyone. It's a pleasure to be here to speak with you today about the performance of the Eppley Caribbean Property Fund. As it relates to the Value Fund, as would have been mentioned earlier, we are pleased to own a diversified portfolio of office, retail, industrial and call center properties in 3 of the largest regions in the Caribbean. We currently have approximately 1 million square foot that spans 17 high quality buildings. And as would have been mentioned, our occupancy rate is 92%, which indicates that there is room for further improvements, and we would be pleased to share that we are actually in discussions that would allow us to have that metric increase before the end of the year. As would have been shared when Eppley would have taken over the portfolio in 2018, just to remind ourselves of where we would be coming from, we would have taken over the portfolio with approximately 6 buildings, and we have currently grown the portfolio to 17 properties. And we're looking forward to increasing the NOI yield, which we currently have at 7.1%. As we have said, we're pleased to own a portfolio of high-quality commercial assets, which, again, cannot be replicated. They are strategically located. There are landmarks in the area that they are located. And our objective, as would have been mentioned earlier, is to be best in class in terms of the properties that we own, to ensure that the tenancy is strong and that our net operating income on a return basis is in line with what our yield and our target. Our NOI, as we know, is fully supported by the income from our blue chip tenants, who would provide strong and stable rental income and cash flows. And as would have been mentioned, we are happy to partner with some of the leading firms, not just in the region, but internationally. And as we would have seen the experience recently through the pandemic, we would have known that these are partners in the true sense of the word, and we're happy to provide the base for which these companies are able to springboard their operations throughout the region. As we would have mentioned before, when Eppley would have taken over the portfolio, we would have had approximately 6 buildings with 296,000 square foot. We are pleased to say that we have successfully diversified the portfolio by geography and are seeking even further opportunities to expand throughout the region. As it stands right now, we would have seen where before we would have had 100% of our properties in Barbados, and we now have 38% of our properties in Barbados, with the majority in Jamaica being 56%. And we're pleased to know that, having promised our shareholders diversity and scale, that this is something that we have sought to achieve and continue to, look for opportunities to grow. In terms of asset type, we would have carved out within the last 5 years an industrial and BPO or call center space. And again, it has added significant resilience to the portfolio and the performance of it. As would have been mentioned, we continue to look for further opportunities to scale and diversify throughout the region, and we can assure shareholders that we will continue to carefully diligence in our fundamental conservative approach to ensure that we are invested in properties that continue to be resilient and that continue to attract good partners, and that would provide the yield that we're looking for. And so we are pleased to share in terms of our operating performance. As would have been mentioned before, our 2022 year in terms of our results was actually record-breaking. It would have been the highest in the history of the fund. In fact, earnings for 2022 were 65% higher than 2021, driven again by our focus on expanding the portfolio. And we would have mentioned that these results would have been the realization of our investments in Mall Plaza, in our call center on Chalmers Avenue, and in our 2 properties in Trinidad and Tobago. Similarly, as we would have seen, our net operating income, which is really the measure of the fund's rental income less its operating expenses, grew by 50% over the 1-year period ended 2022. And we again saw that from the results of our careful diligence and our investments. And FFO again would have grown in a significant way from the resulting earnings that we would have had. But more significantly for this slide, we are sharing with shareholders based on our Q2 results. We're on target to match or exceed our 2022 performance. And this is based on us realizing the results of all our investments in recent times. As would have been mentioned previously, and as would have been known, our FFO, which in 2022 amounted to about 4.1 million, our objective is always to distribute the majority of that. And in fact, in 2022, we would have distributed about 3.7 million of the 4.1 million of FFO that we would have earned. And again, from a dividend yield perspective, we're targeting a 9% dividend yield. And based on our current steady state outlook, again, based on what we would have had contractually agreed, we're looking at a target of 7.2% to 9%. But as had been made earlier by our chairman, the point is that if you are invested or if you are purchasing the shares at this point based on the market price, based on the dividend yields and the dividend as paid, your yields would look a lot higher given the opportunity that you have now for a fund that is a 30% discount based on the market price. So investors were encouraged to further their investments in the fund given the features that we have. As would have been mentioned, in addition to our dividend yield, investors would have had enhanced returns from the capital appreciation that we have realized from the acquisition of some of our properties within the last 5 years. And again, the capital appreciation, yes, does create a hedge against inflation, ultimately because our lease agreements are set to increase or adjust in line with CPI. But more importantly, I believe for us, in terms of demonstrating our ability to find opportunities and provide that return to shareholder, this is the slide that we believe really underscores that ability. Again, we would have shared in previous discussions where we see our Angels Industrial Estate, that would have been a change of use case where we would have been able to get in and to return that value to shareholders. Similarly to 693 Spanish Town Road, this would have been the old Coca-Cola bottling plant. That's how everyone refers to it at this point. But we are in the process of renovating that property, and we have a lease agreement with, again, a blue chip tenant, and the enhanced returns to shareholders is significant. And we're proud of that, along with dividends that shareholders can look forward to, as is true in, real estate, in most real estate, that there is that secure ability to maintain your net asset value. And so at this point, I'm going to hand over back to Justin to just share with us in terms of the long-term view for the fund.
Denise, thank you very much for providing that insight on the fund. And it's true, we are continuing to identify new areas where we see great investment opportunities, where there's less competition. And this pipeline is extremely robust, and we are benefiting from the scale that we have. We're benefiting from the track record that Denise has explained. And that is allowing us to increase the dividends that we're passing through and paying to you, our investors. We know it's very important to, see the fruits of your investment, and the property fund provides different platforms for you to achieve this. It's through cash flows, it's through capital appreciation, and it's through just being able to have an inflation hedge through investments in hard assets. Now, not only do we think about buying assets well, we focus on applying the talent and the resources we have internally to improve operationally the properties that we purchase, which gives us an opportunity to generate additional income streams for our investors. Strategic investments in real estate, it just makes sense, and in the recent inflationary environment, we've seen how this has borne fruit and validated our strategy. In fact, I think Denise has done an excellent job in increasing the rental rates on the lease agreements that have expired, and she's continuing to look for new opportunities through the recent industrial properties that we've acquired to further boost our performance. The share buyback program, again, is designed particularly to take advantage of inefficiencies in the market. We are value investors, and we continue to seek those opportunities out, and we'll do it carefully in the context of a strong balance sheet, which enables us to be able to take advantage of any opportunities that may emerge. And we're continuing to focus on, careful deployment of our capital as we move forward. Denise, I'd like you to also just speak more about the other fund that we have under this umbrella, the development fund, and give a sense of what has transpired over the last 12 months.
Thanks, Justin. And so, similarly for the development fund. Thank you, Justin. And similarly for the development fund, we would have been tracking the performance and would have there would have been several developments in this particular cell throughout the year. Currently, the development fund, as at September 2022, has total assets of 18.9 million Barbados dollars, total liabilities of only 330,000 Barbados, and shareholders' equity of approximately 18.6 million. The mandate of the fund would have been for the past years to divest the properties at their net asset value or above. And we're pleased to note that currently we only have 11 properties remaining in the fund, 4 of which are lower estate lands. At this point in time, Canwan would have the greatest shareholding in terms of square footage, with Villas on the Green at 20%. And we continue to look at opportunities for divesting and disposing of these properties in line with the mandate of the fund. In terms of the composition of the fund at this point in time, we would have the majority of the assets in development land and residential units. As we continue to divest, we continue to build up our cash and our cash equivalents, and currently it's approximately 8% of the portfolio. The properties in the development fund are mostly located in Barbados, with St. Vincent and St. Lucia at about 18 and 16% respectively. In terms of the development and the long-term success plan for the development fund, as was mentioned, we continue to pursue our strategy to divest assets at or above carrying value. During the fiscal year, we would have reported that we would have sold an additional lot in Lower State, which leaves 4 remaining lots. Subsequent to the financial year, we're pleased to report that the development fund would have closed on the sale of Apes Hill Villa number 18, which is located in St. James in Barbados, which unlocked cash of approximately Barbados $1 million. And again, the fund is under contract for disposal of approximately 3 properties, with strategic focus on the remaining ones wherever there are opportunities. Again, we would mention that as we divest and dispose, the development fund would build a huge cash portfolio, and we're seeking to generate a higher yield on the cash in the short term while we pursue the options to adjust the fund's long-term investment focus. I'm going to hand over to Justin to just give us the strategic view for the development fund.
Thank you, Denise. So there has been a recent development in relation to the development fund. And as fund managers, we've always expressed that we, have a very strong belief in the underlying value of the assets that the fund holds. And we demonstrated that commitment by actually making an offer to purchase shares of the development fund at a significant premium in the order of about 20% higher than the market price that pertained at the time when the offer was made. The offer was successful. We believe this highlights our commitment to investors who want to understand what our view on value is. We're going to continue focusing on our 2-pronged approach, which is to address this difference between the market value and the underlying NAV, net asset value per share, while we continue to focus on thinking about how to reposition the mandate of the fund to generate additional cash flows. We think there's a tremendous opportunity, but it's going to take work, and we have shown that we are the types of managers who are prepared to put work into our strategic thesis to make it develop and bear fruit for all our investors. With that, I would like to thank you for your time. And Chairman, do you have any words?
In a moment, we will thank you, Justin. Thank you, Denise. In a moment, we're going to begin our Q&A session. Just to remind everyone, please send your questions to somerbells@eppley.com. I just want to take a moment to thank Justin and Denise not only for their presentation, but for the great job that they're doing on our behalf, managing the assets, tenanting out the portfolio to boost interest income, and repositioning the assets to create capital appreciation. As all investors would have noticed in recent times, we're certainly in a period of uncertainty, and many stock markets around the world, and Jamaica is no exception, have fallen in value. I think our shares in that context offer an opportunity to buy a dollar for 70 cents. It is an opportunity to buy 17 properties that are appraised at 70% of their net asset value and to lock in dividend returns of between 12 and 14%, all while enjoying capital appreciation at a time of inflationary pressure. And so as the development fund showcases, we as the fund managers will eat our own cooking. We will put our money where our mouth is to unlock value for shareholders. That's the same team and the same board that is managing the value fund. We're purchasing shares in the market through our share repurchase program, and we would encourage all investors to take a keen look at the mispricing, that opportunity that exists in our shares. And so with that, Sam, can we please have the first question?
So the first question is, apart from the 693 STR acquisition in December, CPFV has maintained a very cash-focused position. Are there any potential deals likely to close by the end of the 2023 fiscal year? Also, is a reduction in deal activity attributable to low cap rates and higher interest rates, which make financing the acquisition of new properties less attractive?
Justin, do you want to take that question?
We're continuing to assess opportunities. Our pipeline is strong. We conduct extremely careful due diligence before we execute any transactions. There's a transaction right now that we are working through, and we expect that it will close in the coming months. So not able to provide additional context at this point in time, but we're assessing all the opportunities. And naturally, we would be looking at our cap rates and our returns relative to our financing costs. But if you look at our balance sheet, it is extremely conservatively leveraged. So we have a very, very healthy and robust balance sheet that gives us the opportunity to look at things from a fundamental point of view to generate the returns that we require.
Denise, is there anything you'd like to add?
Sure. Agreed in terms of opportunities. There are always opportunities that we're seeing and viewing. Oh. Sorry. I'm hoping you can hear me now. So I agree with the sentiments in terms of our approach towards just our regular diligence process. We would have seen many opportunities come, but we want to ensure that they are in line with our target yields and they fit within our fund and the mandate which would have been set for us to grow and to scale. So we're always careful in that regard.
Yeah, I would just say that we're not in a position, we'll never be in a position to tell you what we're going to buy before we buy it. But as both Justin and Denise have highlighted, we have a robust pipeline that we're always looking at regionally. Higher interest rates have certainly changed the landscape, but fortunately, the cap rates that we see have also adjusted, and we continue to see compelling opportunities. And I think you can expect to see us continue to execute on our investment strategy and buy buildings that are not dissimilar from those that exist in our portfolio today.
Could I add another point?
Sure.
Is that the types of opportunities that we see are not ones that we're obtaining from looking at a website and scouring through and trying to pay the highest price. That's not a good way to make money. We get these opportunities through our relationships, through very actively pursuing opportunities that we see in the market, and sometimes these take longer to materialize. But it's a very, very detailed process. And I think based on our track record of tripling the size of the fund in just a short number of years, you will see that we will continue to deploy capital in a very robust way.
Thanks, Sam. Next question, please.
So we have gotten a few questions on Sunset Mall. Does Eppley own any property in Sunset Crest, St. James, Barbados? Where is Sunset Mall located in Barbados? When the property was purchased and from whom? And is it tenanted? And if so, can you name a few? I can ask them again.
Sure. That sounds like a question for Denise.
That's a good. Those are very good questions. I'm hoping that I can address most of them. Sunset Mall would have been a property that would have been in the portfolio before we took over the management. So we would have inherited one of those, especially. As it stands right now, Sunset Mall is 100% occupied. It's one of those properties that we own in a joint venture vehicle. We own 24% of it. And it's located along the west coast of Barbados in the tourism belt, which has fully recovered. And in fact, there is a waiting list at this point in time for space at Sunset Mall. So whoever asks the question, I invite you to come with me to Barbados the next time, and we can have a look at that property.
Yeah, it's a phenomenal property. Since you asked where it was, I take it you've never been there. I would encourage when you're next time you're in Barbados to go and take a look. It is adjacent to the Sunset Crest housing development that you probably spoke about. It's the shopping plaza right on the water. We have fantastic tenants anchored by duty free, but we also have a bank. We also have lots of other retail, and it does have a waiting list. And it is one of the assets in our portfolio that we think will continue to enjoy very strong occupancy for many, many years to come. Sam, any other question? Next question, please.
So the next question is, could you please explain the renovation of the property referenced as a Coca-Cola bottling plant that Denise made reference to earlier? And also, what about renovating other properties?
Sure, Denise?
Sure. That's a very good question. As we say, we're value buyers and value investors, and so ultimately we look for opportunities where value would accrue. We would have gotten involved in partnership by acquiring 50% of that property. At the time, our partners had intended to renovate and to occupy. We would have had an evolution of that circumstance, and so we would now own 100% of the property. And as we would have mentioned in terms of adding value, this would have been a property that is, bordered by some of the largest names that are in Jamaica. A Jamaica Public Service, or a petroleum company of Jamaica, and the value of the property, because it required some investment, was created an opportunity for us to get involved. And so that's really the target on our strategy: getting low, add our value, and provide a return in terms of capital appreciation as well as rental income to our investors. And so that property would have remained unoccupied for quite some years. The structure of it is good, and so we would have structured to make sure that we mitigated any development risk. And we are well underway with that, and the intention is that we should have the tenant occupying the property before the end of this year, which then will result in net operating income yield for the property fund.
Yeah, absolutely. Just to add a little bit to that, I mean, this is really a great example of the investment managers, Justin and Denise, doing the job of managing the portfolio at their best. Put yourself in the shoes of a retail investor or an institution. If you weren't invested in the fund, I would ask yourself the question, would you have done this directly, and would you have benefited from what Denise and Justin just described? This is a circumstance where an investment was made in a property that was dormant for many years, albeit in a very strategic location on Spanish Town Road. Since it was acquired, significant developments in Ferry have led to very large appreciations in the underlying value of the land, as well as the building. A very careful refurbishment of the property is underway, and the property is now leased up and fully tenanted under a lease agreement contingent upon the work that's being done. And so in a matter of months, on Spanish Town Road in Jamaica, we're pleased that there will be a new completed, tenanted industrial facility that we'll own, complete with, very strong NOI and additional opportunities to earn revenue, including a well that exists on the property. So we're very excited about that. In terms of the question, will we see other renovations? I think the answer is Denise's mandate is to look across our portfolio, and we definitely have ample opportunities to deploy capital to improve and to generate more NOI. And I think that's a feature of the portfolio that you'll see in the years ahead. Sam?
Could you speak to the Carlisle House and Alamac Warehouse, which have occupancy below 60%?
Sure. Justin, do you want to take that? And maybe Denise, you could add if you'd like.
Okay. All right. So again, Carlisle House was one of those properties that was in the fund when we acquired it. It was one of the 6. It's located in Bridgetown, Barbados, and we had a thesis when we acquired the fund that it was a function of the rental rates associated with the property. What we found is that there's just a general need to reposition and repurpose the property. The use case of the property, we think, is better suited to a different opportunity. We're currently pursuing that very, very aggressively, very vigorously. And from the point of view of Carlisle House in the portfolio, it has become an increasingly smaller percentage of the portfolio as we've expanded. We now view Carlisle House as a potential source of positive upside in the portfolio once we're able to have our plans materialize and executed. In terms of the Alamac property, that property, again, is in line with our thesis of expanding our exposure to industrial assets, which have performed extremely well and have been extremely resilient in the context of, the pandemic. You've seen supply chain issues. Warehouse, industrial, logistics-focused assets have been extremely high in demand, and there's been a supply-demand mismatch. This is one of those properties that we are spending some time on from a renovation point of view. And there are lease agreements in place to improve that subsequent to year-end. So we will be reporting on that in subsequent quarters about improvements that have been put in place already since the September results. Denise, I don't know if you have any further context that you'd like to share.
Well, I don't know if it's controversial to say that we have signed leases in place that would bring us to 100% occupancy for Alamac. And as Justin would have mentioned, and we would have, from the question before, there would have been those who are familiar with the Alamac warehouse would recognize that there have been significant upgrades there to allow for that sort of, impact of 100% occupancy, as well as we would be mentioning that, the intention, as we expect, will bear fruit in our results as well, given, the upgrades to the property that we would also be seeing, potentially that there is an increase in the fair value of that. So we're well on our way to realize the full value of our investment in Alamac.
Thank you. So just to answer your question directly, while both of them are 2 of our properties with the lowest occupancy, they both are very different stories. In the case of Alamac, we don't expect it to have low occupancy for very long. In fact, as Denise just said, in short order, we expect it to be fully tenanted. And therefore, the only property in our portfolio that will stick out with low occupancy is Carlisle House. All of the NOI yields and dividend yields cited today in the presentation are net of having that building effectively not making a contribution. The answer there is not that we think we're going to tenant that up in short order, but as Justin and Denise said, we expect to change that use case more significantly. We'd encourage you to view that as a source of upside, albeit not a source of income in the short term. Sam, next question, please.
Eppley currently has its interests within the 3 largest English-speaking Caribbean territories. Do you foresee a potential foray into the LATAM markets for similar deals, or are you focused on the Caribbean where a lot of value is yet to be created?
Thank you. I think I'll take that one since that's more of a strategic nature. I think we've consistently communicated with you, our investors, what our thesis is. Our focus is on the English-speaking Caribbean. We believe one of the benefits of real estate is that local knowledge and relationships and granularity is what creates alpha. And I think you're more likely to see us deepening our presence in markets that we know very well to deliver returns for you, rather than to enter markets of which we're less familiar. That being said, within the English-speaking Caribbean, there an opportunity to grow further, for example, in Trinidad, where we have a presence, but certainly not a presence that represents the size of that economy. And obviously further south in Guyana, the fastest growing economy in the world, we spend a lot of time looking at assets there. We do not currently have assets in the portfolio in Guyana, but I would be surprised if in the long term, Guyana did not also represent a piece of our portfolio, and we certainly are looking at opportunities there all the time. Sam, next question, please.
With respect to the development fund, what strategy is being pursued to improve the profile of the fund and transform, especially with Eppley fund managers taking a majority interest in the fund?
Thanks. Since that's more of a strategic nature, I'll take that question, and if Justin and Denise would want to add anything. I think the strategy that we have at the Development Fund, as we said in our circular, is not going to be impacted by the transaction, which had the fund manager taking a greater ownership stake. It remains as it has been, which is to realize the value of the underlying assets, and to build liquidity in their portfolio. And then ultimately, once that is done, to reposition the investment mandate. And that's something that we're going to do when the time comes in consultation with you, our investors, and we'll make announcements at that time, but we don't have anything to announce today. As we said at the time of the circular, our shareholding will not change the operations nor the strategic outlook for the fund. Sam?
We note that the fund has reported record profitability for the past 2 years. What is the plan to sustain profitability and performance of the fund?
Justin, since that's your job, I'll ask you to take that question.
Yeah, so the profitability of the fund is going to be sustained by continuing to seek out operational improvements. We view the current environment as one that allows us to leverage the pricing power that we have based on the very strategic locations of the properties that we have. Some of the initiatives that Denise would have pointed to are already going to be translated into additional income for the fund in terms of our increased occupancy, the higher rental rates that we're getting at those properties. In terms of opportunities that we're exploring right now, we intend to purchase assets at extremely attractive prices, as we've done in the past, and that will also redound to the benefit of our shareholders. So whenever there's a supply-demand mismatch, whenever there are opportunities to, purchase assets where others can't, this is where we're going to come in, and this is where we strike and deliver returns to our shareholders on a basis similar to what we've done in the past.
Denise?
And just to support the point that Justin would have made, again, to reiterate that our current performance is based on existing lease agreements that we would have in place. And most of our lease agreements, while they're in the medium term, they also have rent escalations built in. And so in a steady state scenario at this point in time, based on what we would have in terms of agreements legally signed, we're confident in the performance of the fund, especially given the partners that we would have had as counterparts to these agreements, that they can stand behind the commitment that they would have made. So even without us having added any other property to the fund, those should give our shareholders assurance that we're able to stand behind what we're saying.
That's right. So, if you think about our business, our profitability is really driven by the rental income that we generate from our properties. And as we look forward, the good thing is the nature of our business is that we have long-term leases and we have high visibility over what that rental income and ultimately what our earnings are going to be over the next few years. We expect that if we do nothing to increase, both because there's opportunities, as has been described today, to improve occupancy. For example, today we talked about Alamac, but also because we have increments and annual increases baked in to many of our leases. And when the leases roll over, we have the opportunity in an inflationary environment to reprice them. So that'll be an important driver. Some of the CapEx initiatives like 693 that we spoke about today and others will add on top of that. And then finally, there's a lot we can do in some of our assets to operate the assets more efficiently. For example, Mall Plaza is not just a function of collecting a triple net lease, but that's a living, breathing, working business. And there's a whole host of ideas we're working on about how to add more value to our tenants that will allow us ultimately to charge higher rents by delivering more value to them. So I hope that gives you a sense of how we're looking at the business. Sam?
So the next question, in terms of industrial acquisition opportunities, do you foresee investing in some of the developments that are set to take place in the future around Lakes Penn and in Portmore?
Well, certainly industrial assets are a big part of the portfolio. We have carved out quite a meaningful portfolio. I would say we have one of the better portfolios in Jamaica of industrial assets. It's an area that we believe in, that we think offers really high returns. And Jamaica is a market that obviously we are very familiar with. So I don't want to speak about any specific area, but certainly along the entire industrial belt in Kingston, whether that's assets that we already own. We own assets on Marcus Garvey Drive. We own assets on Spanish Town Road. And then we own assets further out in Angels. So we already have a deep presence in that belt. And as that area continues to develop, if and when we see opportunities that meet our criteria, we certainly will be actively looking at it. But we don't have anything to announce today.
So the next question is, do you see the potential to further enhance the profile of existing properties with a different mix of new tenants in the future to improve cap rates?
Well, in many cases, our buildings have long-term triple net leases, and there it's unlikely that our strategy there is not to change tenants. We do have some significant assets in the portfolio whose leases are expiring, and we're going to have decisions to make with those tenants about whether they remain and they pay an increased rent. That's an opportunity for higher NOI yields. But certainly we've built the business with a philosophy of partnering with our tenants. And so it's unusual for there to be high turnover and replacement of tenants. It's much more likely for us to work with existing tenants and find ways to deliver them more value and then in return have higher rents. That's obviously not true at some of the retail assets where tenancy is much shorter and turnover is much higher. I think we have two more questions.
Yeah.
Thank you.
So why is the stock price underperforming compared to the NAV?
Justin, why don't you take that one?
I think our intention is to communicate more to shareholders, to give them a better understanding, as we're doing in this forum, about what it is the portfolio comprises, in that each of these assets is independently appraised by a valuator. And in fact, we believe so much in having this done is that it's done twice per year. And based on that level of transparency and our philosophy in providing investors with the information to make informed decisions, we've taken on a more strategic approach in terms of trying to get investors to understand what we're about. That's demonstrated through our annual reports. We've modified the format of that. But that being said, we still believe that the mispricing of the assets relative to the underlying fundamentals is an area that needs to be addressed. And we've put something in place through our share buyback program. And we've also demonstrated, even on the development fund side, that we are the types of investors to put our money where our mouth is and to, essentially confirm our belief in the underlying value of the real estate.
Yeah, that's an excellent question, and I think that's one that shareholders have a right to ask. And I think as some of the largest shareholders in the funds ourselves, you can rest assured that we're as focused as you are on improving that situation. I suspect it is as simple as, one of the most famous adages in investing, which is in the short term, the market is a voting machine, but in the long term, it's a weighing machine. And so at any given point in time, like today, I think people's various demand and supply for the shares determines their price. But fundamentally, over the long term, it's a weighing machine, and investors are going to pay a price for the shares that is in line with its intrinsic value. Having said that, it's something we're taking very seriously. We've certainly done our part by delivering the fundamental earnings of the business. We've gone a step further by paying that out in dividends at a time, obviously, when there's a lot of conversations in markets about the value of dividends. That's something that we've maintained. Even during COVID, we did that. We've increased the frequency of that. We've improved our communication, not just through events like this, but through our website and other things. And then fundamentally, we really put our money where our mouth is. And we've been consistent and quite aggressive. And we're an early adopter of repurchasing our own shares, long before others have followed suit. And I think if investors take a look fundamentally at the portfolio, its quality, its appraised value, the cash yields that it returns, the capital appreciation that we've provided, and then take a look at the shares and who owns them. I mean, I think we have very high ownership of directors and executives, so we have every incentive to do that. I think that's, has to be among the companies in Jamaica that have the highest alignment. And as the development fund transaction shows, this is a board and this is a management team that is focused on shareholder value, and we will put our money where our mouth is to unlock that value. And I have every confidence that, in the short term, the market may be a voting machine, but in the long term, it is a weighing machine. Sam, I think is this the last question?
Yep, we only have time for one last question, but if you have any further questions, you can email somerbells@eppleylimited.com and we'll get back to you. So the last question is, how does the fund plan to grow and improve or the NOI yield?
Great question. Denise, why don't you take that one?
Sure. So we continue to look at opportunities at each of our properties. As would have been mentioned before, there is operational improvements that we can build in. I think to some extent we have not fully flexed our muscles in terms of economies of scales to be able to really maximize value from that perspective. So that's one way. But more importantly, we believe is to increase and improve the income at some of these properties. So for example, for those that are familiar with Mall Plaza, for example, there's a roof space right now that we're actively seeking to transform that would definitely immediately provide increased NOI. And so we've taken a strategic view to see how best we can position the properties, whether it's through renovations or otherwise wherever there is space additional, for example, bringing in an ATM or something else like kiosks could improve our income. And so we look at all opportunities at all of our properties to get that done, and we have some strategic plans that we intend to implement, and we will definitely see the results as they are realized.
Thanks, Denise. Just to add some more color, I mean, as I think about it, there are really 6 things that we can do. We can boost NOI by enjoying the increments and increases that we currently have in the leases. So that's something that's going to happen no matter what we do, and I think investors should expect that. We can also wait for our leases to expire. Obviously, leases have increased These rates have increased in some cases quite significantly. And when those adjustments to market rates happen, you're also going to see increases in NOI. There's some assets that are not contributing significantly to NOI now because they're under construction. An example of that would be 693. When that's finished and tenanted, that is going to translate immediately to a significant increase in NOI. As Denise said, there are things we can do to better manage from a tenancy and quality of the asset perspective. For example, at Mall Plaza, as she said. On the expense side, one of the benefits of having the scale that we have, the 17 buildings and nearly 900,000 square feet in 3 countries, is that we have a lot of heft at a time of rising prices to really take a keen look at all of the costs that we have across our security costs, across our insurance costs, across all the expense that we have, and ask ourselves, are we managing that the best? And then, of course, last but not least is continuing our long history of acquisitions that will boost NOI. So we have a number of levers to pull. These are the levers that have produced the results that you've seen in the last 4 years since this board, which I have the privilege of leading, has taken over, and this management team. And we look forward to continuing to work on these for your benefit. Thank you very much to everybody for joining us today. If you have any more questions that we weren't able to answer, as Sam has said, please email them to her at somerbells@eppley.com. And we'll see you. We'll take the opportunity to wish you a good evening, and we'll be talking to you again at our next update next year. Thank you very much.
Thank you.
Thank you.